The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Bullis. These are your headlines. US President Donald Trump announces Israel and Lebanon will extend their ceasefire by 3 weeks and that he's willing to wait to secure the best deal with Iran to reopen the Strait of Hormuz.
It'll go pretty quickly and we'll have the strait opened up. Right now, we have it closed. We have total control of the strait.
European leaders meet in Cyprus for a second day with the Strait of Hormuz, energy security and the budget on the agenda. But the bloc cheers finally sealing Ukraine's €90 billion loan.
We're moving forward. And first, I think what's important are the short-term decisions we make, such as confirming the €90 billion loan.
Ukraine has money for their, first of all, for our internal production. It means that we are not empty and we are strong.
And Siemens Energy raises its outlook while SAP posts a first quarter profit beat, but warns cloud growth depends on events in the Middle East. We'll hear from SAP's CEO, Christian Klein, at 7:30 London time. Chip stock moves worldwide. Intel surges after hours, adding $64 billion to its market value on the back of a bullish revenue forecast, while DeepSeek's new flagship AI model sends Chinese chip makers on a tear in the Asian session.
Potentially another hurdle removed for markets today as we head into the Friday trade. US President Donald Trump said a ceasefire between Israel and Lebanon has been extended for 3 weeks following a meeting with top officials at the White House. The US president expects the leaders of both countries to visit Washington soon.
We had a great meeting with the very high officials of Lebanon and very high officials of Israel, and we think that the president of Lebanon and the prime minister of Israel over the next couple of weeks will be coming here. They've agreed to an additional 3 weeks of, no firing, ceasefire, no more firing. Let's see. We hope that happens. It's not going to happen between them, but they do have Hezbollah to think about. And we're going to be working with Lebanon to get things straightened out in that country.
Well, President Trump also weighed in on Iran, saying that he won't be rushed into a deal. The president claimed the US is running the Strait of Hormuz.
I thought it would take 4 to 6 weeks, and I was right, because at the end of 6 weeks, at the end of 4 weeks, their military was decimated.
So are you saying?
But now what I'm doing, I can't tell you that. I don't want to put that kind of a timetable on it, but it'll go pretty quickly, and we'll have the strait opened up. Right now, we have it closed. We have total control of the strait.
Well, let's bring in Dan, who joins us now. Dan, just give us the latest on the situation there. It feels like we're in a holding pattern at the moment. That stalemate we talked about yesterday feels like it continues.
Ben, I think you're exactly right. I think holding pattern is a good way to describe it. You could also call this an impasse. And I think the oil markets really are the leading indicator of not just sentiment on the ground when it comes to the trajectory of the conflict, but also ultimately where the conflict is going as well. WTI surging more than 17% this week, climbing back towards $100 a barrel. You can see here 95.88. Brent now well above 100 at 105.44. And what this ultimately shows is that traders, at least right now, are not really convinced that this impasse is going to be resolved anytime soon. Of course, we saw the maritime standoff intensifying overnight. President Trump ordering the US Navy to shoot and kill any Iranian boats placing mines in the waterway. And US military officials are also now reportedly developing new plans to target Iran's capabilities in the strait as well if this ceasefire falls apart. President Trump has extended the Israel-Lebanon ceasefire by 3 weeks after Israeli and Lebanese representatives met at the White House overnight. The original truce was set to expire after 10 days. So, look, this is being viewed as broadly positive in the region. We know that Iran has pushed to make a ceasefire in Lebanon a precondition of any deal with the US. I spoke earlier with the former US Special Envoy Amos Hochstein here in Abu Dhabi for reaction to that news. I asked him to weigh in on the ceasefire extension and also asked specifically if he thinks Lebanon can really disarm Hezbollah and remove Hezbollah from its political influence without starting a civil war on the ground. Here's how he responded. And we'll try and get that to you later on in the program. But of course, when you cast your mind forward to exactly what happens next here, it seems as if there's no diplomatic off-ramp. And the president has also blamed a clear lack of leadership inside Iran for holding up these talks. Now we also know why that leadership vacuum exists as well. Interesting report from the New York Times overnight reporting that Iran's Supreme Leader Mojtaba Khamenei is alive. But according to the Times, he has life-threatening injuries, including to his leg and extensive burns to his face and lips. He's been reportedly isolated in a bunker as well and struggling to give direct sign-offs on some of the ceasefire terms that have been presented to him. So that means that the military and civilian leaders in Iran have been left without a clear mandate to negotiate, perhaps helping to explain why the peace talks that were set to take off earlier this week ultimately failed to launch. So as we approach a new week next week, the conflict duration extending, the duration risk continuing to build for the global economy and for international investors. And as it stands right now, the situation appears to be perhaps getting worse before it gets any better.
Dan, thank you very much for bringing us the latest there from your perspective. Let's get into the conversation with Aldo Spagna, who is head of energy strategy, BNP Paribas Markets 360. Aldo, it feels as though we head towards the end of the week, that we have some moving pieces here. The ceasefire between Israel and what we're seeing with Hezbollah, and that situation, it's been a sticking point, right? We've seen issues where that has not been able to be resolved by Trump, and it's been foiling his attempts to progress the Iran war. What do you make of the situation now?
Look, it's undoubtedly, if you look at the ceasefire specifically, it's undoubtedly good news. I think we need a few more pieces of good news before we can really start thinking that Hormuz would open. Because from an energy perspective, this is positive, but in the end, we need the flows to flow through the Strait of Hormuz to kind of avert the shortages that we're all expecting. And for that, I don't have a lot of evidence yet that that's imminent.
The narrative we had yesterday from Trump was that they're not threatened by what Trump called Iran's little wise guy ships, and that there's a shoot-to-kill order from the Navy if there are Iranian boats laying mines in the strait. Does this force that has been demonstrated by Trump make any difference to whether we could get to a quicker resolution, or do you think it's just inflaming the situation?
I mean, it's probably somewhere in the middle. It's at least it means that the way I read these kind of headlines, it's not so much about ability. It's kind of, there is still no, I suppose, willingness to compromise here. Right? If you have this kind of, and this is on both sides basically. If you have both of inflammatory talks on both sides, I would assume it's going to take quite a while before we settle down and start seriously talking about resuming flows through the Strait of Hormuz. So for me, it means it's a delay case in terms of seeing flows coming back.
Aldo, to my mind, this impasse, it may be I suppose a neutral situation in terms of the military side of things and the actual fighting and the conflict. But in terms of the energy price shock, for every day that it is not fully resolved, that's another day longer that the strait is shut, the oil is not flowing, LNG isn't flowing. How come we're not seeing the price of oil go up each day that this isn't resolved? I mean, it's not even at the highs that it was in the middle of the conflict when we still had supplies that had set off, yet to reach Europe, Asia and elsewhere.
Yeah, it's a good frame. So look, if I would have to kind of characterize where we are, we have no war, we have no peace, and we have no flows. So that's kind of where we are. You'd assume if you model it, indeed, you basically take an upward line every day, you lose. Look, I think what the problem is that, I mean, people have talked a lot about the different benchmarks, right? What does paper crude really reflect? That's 2 months into the future. So I think there's still, I guess, people who think that within 2 months we probably should see some kind of ramp off. I'm kind of doubtful. And it is kind of the issue here, particularly on Brent, because we all look at Brent, is that every headline that is potentially de-escalatory, that kind of increases the probability of a ceasefire, you go down. So you keep having basically the peak cutoff of the Brent curve. We used to look more at the physical benchmarks, which tend to be stronger and a bit more stable, because that's closer, not close enough because it's not prompt, but it's closer to what people are paying in the market. I think the evidence I'm looking for now is, it's really, we're seeing onshore stock draws basically starting to happen. I think that's a signpost. It's kind of the last buffer you have. And it's not going to take long. I mean, just give it a month. And I think we are at much lower stock draws, onshore stocks, than you would like to have. I think that's the signpost when people start to realize, really, okay, we actually have a structural problem here in oil markets, and then prices have to come up further.
Yeah, I mean, we had the warning from the executive director of the IEA at Singapore's Converge Live, CNBC's event there, saying, you know, there is an imperative that alternatives to the Strait of Hormuz must be found in the long term. It must spur the world into action. But I just wonder, in the absence of that, we've seen governments try and cushion the impact on consumers and businesses. In your note, you say we're seeing demand destruction mainly in APAC, but is there a danger when those governments step in with fiscal support or tax measures that actually it doesn't create demand destruction, and we get a situation where potentially people are still consuming oil and energy at the same level, it's been artificially cheapened, and we then have potentially a physical supply shortage?
Yeah, look, I mean, it's probably it's what it tends to do is, I mean, politically, it's completely understandable because you can't have prices just endlessly coming up. It lowers your slope, for sure. So it lowers your slope of demand. It lengthens the adjustment process, I would suppose. Look, in the end, if our forecasts are anywhere near where reality turns out, oil prices will be high enough in, give it again, 4 to 6 weeks, I would say. Yeah, I think we're much higher. To actually also drive the demand destruction. The second point is also, if you look at demand destruction, you really want to look at products more than oil. So the Brent price is important, but I'd much rather look at jet prices, gas oil prices. That is where demand destruction happens. And we're seeing it already. Again, we're also seeing it in Europe. Flights are being cancelled. Of course, unprofitable routes, domestic ones, but you're seeing already, and that's preemptive demand destruction, I would call it. I think that's quite of a rational thing to do. It's happening already, but you're right. I mean, the more you keep prices contained, the longer it's going to take to balance. It will balance.
As you point out, the airline CEOs have been on the front foot here, taking off a certain capacity, trying to manage the situation. But how bad do you think the jet fuel crisis could become for Europe?
I mean, for Europe, so I think you need to find a solution. So, look, if you look at jet, the issue has been it's more difficult to stock effectively. Diesel has higher stocks than jet. This is why partly why jet is higher. If you kind of look, what we can do is Europe runs its refineries as much as it can in a jet mode. Fair enough. US does the same. We get more from Nigeria and we get more from US. If you add it all up, you're not balancing. You're kind of getting there 2/3, 80% of the shortfall. You kind of capture with other supplies, circuit breakers. The other one is either stocks. We still have stocks. We've got, I think, 45 days of forward cover and demand destruction. So I think what we're going to be seeing over the next 2 months, you're going to see stock draws. And you're also going to see kind of the proactive announcements from airlines that already see something coming. If that proactive part is big enough, you kind of push out the problem of real physical shortages. If you don't do enough now, yeah, you might actually end up there. I still think it balances, but it's very tight, and it probably needs higher prices.
Aldo, we have appreciated your commentary. It's clearly a situation everybody's watching closely from all angles. Aldo Espana with us, Head of Energy Strategy, BNP Paribas Markets 360.
Coming up on the show, EU leaders finalise a €90 billion loan to Ukraine after months of wrangling, with further talks due in Cyprus today. Plus, a blow for BP's new leadership as the company faces a shareholder revolt. And US-listed shares of SAP jump as cloud demand drives a first quarter beat. CEO Christian Klein joins us for a first on CNBC interview at 7:30 London time.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts.
Right, let's bring you up to date with where the markets are. And this was the picture at the end of Thursday trading on Wall Street. You can see all of the three major averages pulling back. This is, you can see, coming off the all-time highs that we've been talking about earlier in the week. The drops were led by a fall in software shares, and the higher oil prices weighed on equities. A lot of investor uncertainty around the trajectory of the Iran war, this impasse that we've been talking about, despite the truce between the ceasefire between Israel and Lebanon being extended for 3 weeks. So you can see the numbers there. It was the Nasdaq leading the declines, down almost 0.9%. Of the separate sectors, it was tech that was the biggest faller, down almost 1.5%, that basket of stocks. Let's see how things playing out in the Asian session. And you can see it's the Nikkei in Japan that's leading the gains. We had an update from Japan showing its core inflation accelerated for the first time in 5 months, rising to 1.8% in March. Doesn't seem to have spooked investors, that, given that it was in line with expectations. But that is the somewhat mixed picture there in Asian trading. The Kospi in South Korea somewhat flat in the current session. Let's have a look at what's being anticipated when Europe trading gets underway for Friday. And again, a mixed picture there. It looks like the Stoxx 50, the European-wide benchmark, is looking to open slightly lower, 0.5%. Same with the FTSE futures, opening 0.75% lower. The DAX just above the flat line, but nothing major to write home about there. But a mixed picture. We'll see how that progresses as we approach the market open in Europe in 40 minutes or so from now. In terms of what's being expected stateside, that is what's being called, again, a rather mixed picture. Investors, I suppose, really in wait-and-see mode, treading very cautiously until we get some sort of clarity on where things stand with that situation between the US and Iran. In the meantime, the European Union has finalised a €90 billion loan to Ukraine. This after Hungary and Slovakia dropped their opposition to the move following months of negotiations. The funds will bolster Ukraine's budget for 2026 and 27 and will be used for the country's defence industrial capacity. The loan is due to be repaid by reparations due by Russia to Ukraine. The news comes as the EU adopted its 20th sanctions package against Russia, moves welcomed by the French President Emmanuel Macron and Ukraine's President Volodymyr Zelensky as they attended an informal EU leaders meeting in Cyprus.
We're moving forward, and first, I think what's important are the short-term decisions we make, such as confirming the €90 billion loan, the possibility of advancing on a new package of essential sanctions, continuing our concrete bilateral support and aid to Ukraine, and continuing our action on the shadow fleet. As for the rest, there will be a debate that will unfold, and there are accession chapters.
You are right, 100%. Is pushing Russia to think more about negotiations. It means that Ukraine has money for their, first of all, for our internal production. It means that we are not empty and we are strong, not only by our absolutely strong soldiers, but also with the capacities, with the instruments, with weapons, and with energy, as I said. So it's a great decision. It was not about financing. I always said it was about security.
Well, European leaders will continue their informal meeting this morning, turning their attention to Ukraine's membership bid for the EU, as well as the bloc's mutual defence clause. Leaders will also discuss the fallout of the war in Iran, in addition to figuring out their collective budget for the next 7 years. So a very packed agenda ahead. The Norwegian fertiliser maker Yara posted a first quarter beat on the top and bottom lines, citing higher nitrogen margins and strong deliveries. Sven Tore Holseter is the CEO of Yara International and joins us now. Sven, how much of this is down to the elevated price we're seeing for fertiliser, given the supply crunch and the inability to get it out of the Middle East?
Quarter, the impact is quite limited because we were already in a demand-driven market before the conflict in the Middle East. But we're very pleased to report another strong quarter, strong deliveries, strong production, and also as a result of this, doubling our return on invested capital on a rolling 12-month basis compared to where we were 1 year ago. But of course, as we're speaking, there are tremendous impacts from the situation in the Middle East, and that's hitting across the whole food chain right now.
And in terms of the people you're speaking to and those on the ground there in the region, in the Middle East, what's the situation in terms of the supply and the flow of fertiliser? Is there any sign of the crunch easing or not?
Well, this is a really demanding situation, and 1/3 of urea fertilizer flow is going through the Strait of Hormuz, and fertilizer is not just another commodity. Half of the world's food production is a direct result of fertilizer being applied in the field of the farmers. So when you have disruptions to that, it has huge implications. And at the moment, it's very challenging to get a full picture of what is happening. But one thing is the block of the Strait of Hormuz and product not being able to get through the strait. But at the moment, also production is shut down across several of the plants in the region. And while it's difficult to put an exact number of it, but it could be as much as 500,000 tons of urea fertilizer lost every week now as a result of that. And if I try to translate that into food production, well, that's the equivalent of around 10 billion meals lost every week right now.
Svein, that is quite a number. Let me ask you too about the nitrogen margins, cited as one of the catalysts in the results today. We've all been tracking that rise in the price. What action have you seen? Has it all been one-way direction when it comes to those margins?
Well, it's very volatile and it's hitting in several areas. In order to produce urea or nitrogen fertilizer, the main input is natural gas, and we've all seen the impact on natural gas prices across the world as a result of the conflict. Meaning that for those producers that are exposed to global gas prices, you've seen a significant increase in production cost. At the same time, because of the importance of the Strait of Hormuz for nitrogen fertilizer, we've seen a strong increase in the price of nitrogen fertilizer as well, so that margins are actually increasing as a result of this. But it is very volatile and it is changing from day to day.
In terms of what could happen from here, we're all watching very closely the dynamic around a ceasefire, whether this off-ramp leads to any notable change in the dialogue we're seeing from the Middle East. But if things were to be solved, what sort of time frame would that take? Just as I pitch that question to you, I'm just going to point out to the audience that we've got Donald Tusk from Poland, who is currently at a European summit. And of course, one of the big issues has been just how secure Europe is at this point, as we talk about the situation with threats on our border too, with Russia. So we're just taking this clip for you. I don't know if we're going to listen in though, Svein, or whether we're going to take you away from the interview, whether just I'm pointing out that this is what's taking place. Svein, I will put you on hold for a moment. We will listen in.
About the lifting of sanctions against Iran. I have nothing original, nothing interesting to say about this, because it's I am more focused, as you can imagine, on the eastern flank problems, and what I feel is that we can be and we will be in troubles, not in the middle.
Do you foresee Russia being more amenable to negotiation now after yesterday's decision on Ukraine, on the funding?
No, I am a little bit skeptical when it comes to possible positive consequences of these negotiations, frankly speaking, and it's for me it's obvious that the first condition to have any kind of good result of the negotiations is to be as tough as possible again vis-à-vis Russia, with our sanctions, with the determination to defend ourselves vis-à-vis Russia, and of course to help Ukraine. I'm really, really happy. Yesterday you could feel a huge relief among leaders, because it was, for the first time in years that there were no Russians in the room, if you know what I'm talking about. But joking aside, hi. Hi. No, it's a joke. And
Okay, we're going to leave that there. Donald Tusk speaking to media, and of course the big issue has been his comments saying whether the US is loyal to Europe's defence. I'm going to come back to Svein Tore Helseth, who's been very patient with us. Svein, thank you very much for indulging us there, because as we talk about one crisis, where of course we know there's still other crises that we're watching, and whether there is something else around the corner when it comes to food security for Europe. As we consider the current situation, probably the perfect time to ask you, is there more that Europe can do when it comes to food security?
Absolutely. Food markets are also linked to energy markets. And now we're close to 5 years into the energy crisis in Europe. This is a massive wake-up call on dependencies, as we saw with regards to Russia. And also now in terms of the food system, we need to support farmers. Farmers are seeing margins being squeezed right now. They're in the application season. I was together with farmers in the fields here in Norway last week to see what they're up against. And it is a challenging environment. So we need to support farmers, ensure that they have the support that they need in order to get fertilizer into the fields right now to ensure good crop yields going forward. But on a global basis, we're seeing now how fragile the food system is, and we need to do more in order to make that more resilient.